good morning, good afternoon, and good evening, traders from across the globe. Thank you for tuning in. Metastock, thank you for having me. Fantastic presenters before me, and I hope there'll be some great presenters after me. So I've got a series of charts that I'd like to show you. I'm not going to try to sell you a system here. What I'm going to do is sell you on the fact that when I called the bottom in the beginning of this year in a Metastock webinar, then continued to call the bottom. And in fact, if you'd like, you can check out these videos. I put out a YouTube video just about every night. On Jan 5th of 2022, I put out a video. Jan 5th of 2022 is this date right here, right in that circle right here. And in that video, I basically said the top is in. There are reasons why. Okay, that's great. Well, since then, I've been calling top is in, market's going to crash, market's going to crash. The beginning of this year, I put in the lows are in, the bottom is in, did a bunch of videos, a series of videos. Of course, you can always go back and see them. I'll show you the dates, even though it doesn't really matter unless you want to look them up. But there are videos that will show you just about everything I'm calling. So this is how stock market bottoms are born, 2/7/23. And then I did a webinar about a week later, basically called The Market Has Bottomed, More Proof, 2/15/23. So the market has bottomed. I'm going to show you that. I'm going to show you that you should be positioning for more upside, how it bottomed, why it bottomed, and where it should go next in a series of very simple charts that you should be able to understand. Before we get started, please know that this is a very risky game. You cannot trade anything out there from crypto to options to anything in between without serious risk. So put your stops in and put them in before you ever put on a position. Quickly about me, if you don't know who I am, I started in this business. I am Oscar Carboni, started on the trading floor in 1982, spent my entire adult life there until they closed down the exchanges in around 2006-07. We went electronic. During my stay, I started on the exchange floors in Manhattan, and I was holding charts, point and figure charts with pencil on graph paper, literally. I helped the exchanges get charting off of graph paper onto computers. As time passed, I revolutionized that. I helped the exchanges get trading off of yelling and screaming and open outcry, which is what I did for most of my life, onto the internet. But while I helped them do that, it also ended my career, right? They gave me a laptop one day with everyone else and said, well, it's over now. You helped us get electronic. Good job. Now go home. All that did for me was allow me to do this from another location, no longer having to go to the trade centers. During my life, I have become probably the best chart analyst on this planet. I am not just tooting my horn here. You follow anything I've done. Every one of my year-end projections turn out to be correct. This year-end projection was for over 5,000 S&P. But when I put out the projection, we were trading at 3,800. All right, Oscar, you're crazy. Of course I'm crazy, but I follow charts. I don't think about this at all. Chart said we're going there. Well, guess where we are now? We went from 38 to 44 on our way to 5,000. We will get there. Let me start to explain. There's a lot of things that we can talk about, but I'd rather just show this to you in charts. One of the things I will say is this. If you like this presentation that you're about to see, I sit live in a trading room on camera and microphone, like 20 hours a day. You can just join my free site. Come to this live trading room where you'll find me on camera. I usually have two cameras, not just the one I'm pointing at, but one right in front of me, like the one you're looking at now. And if I am going to trade, I tell you about those trades, and you can get in and out with me. Last month, following my OMNI system, we made about $9,900 per person, one lot trades only. I can't guarantee we're going to win like that every month. The month before, we made $5,200. So I do send trading signals. When I'm going to trade, I let you know. You can find those at livewithoscar.com. It's a very simple site. It doesn't even require a credit card. Put in a name, username, password. Check your spam for email. You'll receive an email from me. Join the site. Literally, you will click join Oscar's chat room, and boom, you'll be in that chat room with me. That's what I will offer to you if you like what you see in this presentation. Come join me in my trading room where I can help you out further. It's free, by the way. All right, so what are we looking at? E-mini S&P, I'm telling you right now, kids, welcome to the AI revolution. It is exactly what I've seen. Now remember, I've been doing this since I'm 18, paying attention on Wall Street to everything. When the computer age hit, we had this massive run. When we got a little past that to cell phones, we had this massive run. The internet came out, we had this massive run. This is the AI run, and I will show that to you. This is happening, kids. What you are looking at is the E-mini S&P daily bar. Now, when last year started, 2022, we were making a series of highs and lows, right? So you have a high here, and you have a low. And then up here, you put in a lower high. It's lower than this high, and a lower low. You rally back up, you put in a lower high. You drop to a lower low. That is absolutely confirmed bear market. Lower highs and lower lows confirm a bear market. Simple, right? Simple. Well, we reached the point where we put in a low, which was September last year, 2022. And we put a high in, but this high was a little lower than that high. However, this low runs to a high. The next low that comes in is a higher low than the low before. Complexion has changed. Absolutely right there. Within 2 weeks of that, I put out the bottom is in videos. Series of videos, and I've been showing you the bottom is in since. Now look what happens. We put in a low, we put in a high. We put in a low, we put in a higher high. Interesting. We come down and put in a higher low. Look, this low is here, that low is higher. And now up into a bull flag, up into a higher high, and in a bullish channel. So I do not care how many bears are out there. And boy, up until about 10 days ago, everyone was bearish. In fact, the last 2 webinars I did, I was the only person bullish in the entire series. Ask anyone who watched the last 2 webinars. Here I am trying to call the bottom in the middle of an avalanche. I use technical analysis. I do not think I'm smarter than the market. The analysis said, look what's happening, Oscar. You see you're in this big red channel moving down and below this 200 ball moving average right here. All right, so this is simple stuff. You're below the 200 ball moving average. You're building a series of lower highs, lower lows, lower highs, lower lows, bear market. Well, now look at the channels. Now we can get rid of, you are above this red channel, right? So we can make that pretty thin, almost out of the way. And we're putting in higher highs, higher lows, higher highs, higher lows, bull flag. It catches above the 200 ball moving average right about here. And away we start to go. Welcome to the AI revolution. Now, this is the E-mini S&P. You see this green line right here, which I'm going to darken in for you? This green line represents all-time highs, the highest we've ever been. Look at how close we are to that. And I've got people telling me we're in a bear market still. What do you think of that? Let me continue to show you more proof. There is no shot we're still in a bear market. Next, the NASDAQ. Let's go back and look at this. And now, by the way, many of these charts are going to have tips, tricks, and techniques that you should write down. Get yourself a piece of paper and a pen or a pencil, or type it up. You're going to want to write some of this down. I'll show you. The NASDAQ was working, last webinar we did, the NASDAQ was working on 150 ball moving average, and it was working perfectly. Every time you got to the 150, something dramatic happened. So it was working perfectly, and you had a channel moving lower, NASDAQ getting destroyed, everybody's bearish, and right about here, we start to notice the market is changing complexion when we started to do videos about the complexion change, and we start to move higher. Well, the tip that I'm going to show you on NASDAQ is in strong bullish channels right now, opposed to the downside, which we used to have below the 150. We're now above the 150 moving average, and we're holding. That's different, right? So sell here. When you get up to the 150 ball moving average, you can sell. When you get up to the 150 ball moving average, you can sell. Well, it becomes different here. Things change. Complexion is changing. And we start to move higher. You hold on to the 150 and start creating these channels moving higher. You had the big green channel. which has morphed into this black channel. But look what's happening now. Now you're really starting to get into some upward trajectory channels here. Look at this purple thing here. All right, so now you're in this upward trajectory, and in fact, it's building another one. Look at this. You've got another channel building right here. At least you've got a good support line building. This is showing us it just wants to continue higher, even if it pulls back. Nothing goes straight up, as you can see. Up, pull back, up, pull back, up, pull back, up, pull back. Nothing will go straight up. But we are geared for the upside here, kids. Now, here's the tip on this chart. We have switched from the 150 bar moving average to the 18 bar moving average. Let me show it to you and I'll blow it up. This is what I want you to use to time the NASDAQ for the next week or two until it changes. The 18 bar moving average has become Wall Street's darling. Look at it. They decided to just attach to it, and they're buying it at every instance they get. If it gets under, they'll sell. When it gets back above, they'll buy it again. So we have morphed from the 150 to the 18 bar moving average on your NASDAQ, and that is the tip on this chart I'd like to offer to you. So in our last webinar, it was the 150 that did us really well in the NASDAQ. No longer. Now we are looking at the 18 bar, much closer, but use that to time your NASDAQ. All right, let's go find another chart. The Dow Jones Transportation. Look at this bad boy. There's so much on here. There's just so much on these charts. All right, so in our last presentation, we had a few things that we discussed. Let me pull this back down here. I'm probably going to need this at some point. Let's leave this out. So the golden cross happened. Well, let's go back. We talked about while we were in this downward leg, things are going to happen to get us out of trouble. The golden cross has to happen, which is the 50 and the 200 crossing one another. And that did happen right about here. We needed to get above this red resistance line. We did about here. It turned into a bull flag. Bottom was in. We called bottom. And let's see where we're going to go next. After the bull flag rallied, market rallied up, came back down. But basically now it's just testing this green support. But here's the important thing about what's going on. Top day right now. You can basically get long every time you get to the bottom of this channel in the transportation average. Not only that, we're using simple support resistance here, kids. Simple. Check this out. You're also now getting above major trend lines. And I tell you right now, whether you know this or not, every algorithm on Wall Street's got this stuff programmed in. An algorithm is nothing more than the information that happened on this chart that gets put into the algorithm. The difference is the information people are programming into that algorithm. It's only as good as the trader doing the programming. You know what I'm saying? Not everybody's really good at trading. I want you to know that right now. Don't always believe in algorithms. They're written by humans. All right, so anyway, look at this resistance line right here. And we are now above the resistance line. You see that? This is the important thing, though. You are going to just keep working this channel until you fall out of it. It is a perfect channel. And while you're in this channel, you can just refer to it and buy the dips in your transportation average. Even though we don't trade the transportation average, but you can trade stocks that are in it. Look at how well it's working. And this is one of the leaders of U.S. indices. So forget about this downward move, kids. Forget about another leg. Forget about all of that. You may get dips. The bottom is in, and I've got plenty of charts to prove this to you. You'll see. Let's move to the Russell 2000. Let's take a look at this bad boy, what it's done and where it's going. If you remember these very charts, by the way, I'm using the exact same charts I used in my last webinar. You go back and look at the last Metastock webinar. You will find every single one of these charts. I've just allowed the future to continue on, and we're looking to see if we were right or wrong when we made assessments on these charts in our last webinar. So Russell 2000 daily bar started off the massive drop in 2023 with a head and shoulders, right? Classic head and shoulders, drops into a bear flag, classic stuff, drops down, hits this triple bottom and starts moving into this blue channel, moving higher. The interesting thing is that it starts to get above the 200 bar moving average, which has kept it in check for the whole down move. So We're above the 200 ball moving average. We're above the red resistance line. New channels are pointing higher. Here's your tip on this chart. If you hold right here at the 200 ball moving average, you can buy it again. Wait for it to test the 200 ball moving average right here. You buy Russell again if it gets there. The worst that's going to happen is you're going to get down to this channel, bounce off of it, and head right back up again. So we are in an upward trajectory. Nothing goes straight up, but that is what's going on here. The bottom is in, kids. By the time we're done with this video, you will be convinced. The bottom is in. We are heading higher. Nothing goes straight up. Remember that, but we are heading higher. Lots of charts to show you. What else was in our last webinar? A crude chart. The tip in that webinar is the exact same tip I'm going to give you today. It's working perfectly. Check this out. Simple, effective. The 100 ball moving average. Now, the algorithms are written on different markets. Believe me, they incorporate these averages. Look at how you can just see this. You don't need an algorithm to see what's going on here. Crude, first of all, crude below 77 will help to buoy the stock market. The stock market's been going up since about February. Really, Jan and Feb, it started to go up. You know when crude got below 77? In the same month that the S&P started to go up. These things really work. But that's not the tip on this chart. The tip on this chart is this. Look at this insane 100 ball moving average and how well it works. Look here. Let me darken that in for us so it give me a little bit better tool to work with. Check this out. Look what happens every single time you get up to this average. Right? Hit it, done. Hit it, done. Hit it, done. Hit it, down. Spends a little time above the average and breaks back down. Up to the average, breaks back down. Well, look where we are right now, top day at the average. Use that for your trigger, kids. On crude oil, 100 bar simple moving average is your trigger. It will change. These averages do not last. You cannot count on this next week, maybe. However, looking at this, you've been able to count on it for about a year. Eventually, the 100 will stop working. It is working now. Use that to time crude. Remember, I'm just here to show you some tips, tricks, and techniques that I know absolutely work. I am a Wall Street pro. I'm very good at this. I promise you these will work for you. Just use them going forward. So that's crude oil. Let's go to another one. Oh, I love this one. Look at Bitcoin. We're going to 85,000. 2 years, 11 months, kids. You heard it from Uncle Oscar. Anyway, left shoulder, head, right shoulder. We know we started this mess with the head and shoulders. Big drop down. Right about here, I start doing webinars to say it's becoming promising now. It's getting better. Look at Bitcoin getting better. Well, you know what? It is getting better. And there's a little gift on this chart, too. Wait until you see what they're using on this crazy thing. Little gift on here is the 11 bar moving average. That has become Wall Street's darling. Under it, you're short. Above it, you're long. That is your Bitcoin. Write that one down. I've done the research, kids. These are working right now. You don't have to do the research again. Take my word for this. So, but there's more. I have a better Bitcoin chart. I have one a little more blown up than that. Check this out. This is that very same chart with the truth in it. Look at what's going on here. So you know, if I put the 18 bar average on here, you'll see it's right there. The 50 was in vogue. That's the big one. Now it's the 18. On this Bitcoin chart, what you're seeing is, of course, you had the downward channel, gets above the 50 and puts in a bull flag. Bull flags are like every other formation that we look at. They do work. Nothing works 100% of the time. That, of course, you can gyrate up and down inside that flag, but it is a bull flag. And in the end, Bitcoin should work its way higher. So again, if we just switch this to an 18 bar average, you'll see how well it's working right now. It was the 50 and it has gone 18 on us. I'll even make it orange so it looks just like the one I showed you. So we are looking at, I'm sorry, I didn't change it. All right, very good. So we're looking here at coming down to maybe that average. I don't think you're going to get through the flag. I love the way Bitcoin is starting to work its way higher. Simple charts, simple proof that these things are coming our way. Now, a lot of what's going on is, of course, the Fed stopped raising rates. The market goes right back to where it was before they started raising rates. But now we're looking at a bond chart, kids. This one's a little bit scary. Looking at the 30-year bond chart right here, one thing you need to know is that when bond futures go down, interest rates go up. See this little teeter-totter, little seesaw? Let's say you're out in the park. Well, the big heavy kid is the bonds right now. It makes interest rates go up. Rates rise when T-bond futures drop. So T-bond futures were dropping the whole time the Fed was raising rates. And it stopped cold at the 150 bond moving average, except for one brief period. That 150 comes back into play. But when I showed you this chart last, I put this very chart in front of your eyes, and I said this is a must-hold situation. If you break this trend line, rates are going to go up again. Well, kids, we broke the trend line, and I think they're going to end up raising rates again, because when bonds go down, by the way, rates are going up. Whether the Fed says a single word out of their mouth does not matter. Traders can raise rates by pushing down 30-year T-bonds, 10-year notes. Inherently, it pushes up the actual rate, even though the Fed hasn't said a word. Traders themselves make rate changes, even if the Fed doesn't get involved, just by moving bonds around. So bonds broke through the must-hold area. That's not good for interest rates. It means the Fed may have to raise rates again, which will give us another pullback in the stock market. And it'll pull back to all of those trend lines I just showed you and then head back up again. That's what those trend lines are for. They're there to let you know when you get to them, you can react. So what you're seeing right now is the bonds broke again, that 150 ball moving average. It got really exciting right about here because for the first time in 2 years you got above the 150 right here. All right, so finally bonds are getting above the 150 ball moving average. This is a wonderful thing. But look, back below, and it did not hold my must-hold support area. Bonds will continue to drop, driving interest rates up, which does put some weight on the stock market. So nothing goes straight up. Stock market is in a bull market. If they raise rates, it'll jigger-jag it a little, but it will continue higher. Tip on this chart, use the 150 ball moving average to decide your T-bond direction, which is clearly the short side right now. If it does not hold the must-hold area, rates will go higher. It did break the must-hold area, and you can see what's starting to happen. So we're just going over the same charts we went over in our last webinar. I hope these are clear and simple for you. What's next? No, not yet. We'll come back to you. You can't be there yet. Let's see what else we have. We have the euro as a tip on this euro. Europeans, if you're watching, we've migrated away from, in your euro currency, I'm just going to show you the quick tip on here. We were using the 70 ball moving average, the black average. It was working like magic, just like magic. Well, it has morphed, and we are now using the 100. I'm going to cut the 70 out of the way. Well, that took away too many things. Let's put that back. I will just make it lighter so that it disappears for us. And this way nothing gets cut when I cut it out of the way. We are now going to go with the 100. The 70 is no longer in vogue. If you are a euro trader, start using the 100 ball moving average as your key. Look at how well and how smoothly it works. All right, so right about here, we shifted from the 70. Right about here, the 100 bar simple moving average enters the arena, if you will, and starts to become what Wall Street is keying off of. And if you ask me, that's a bull flag right there, and it should take your euro higher. At least looks like a bull flag to me. So use the 100 ball moving average, simple moving average to time your euro. I think you will find that an appetizing average at this point in time to help you gauge which way euro should go. Again, this being a bull flag tells us it wants to go higher, should go higher. What I mean by the bull flag is if we just drew it in, you got a flag, like you can go like this and call that a flag and make it simple. We'll create a parallel trend line of that, drop it down. So now we know we have a parallel flag in here somewhere, right? So you've got some flag looking thing here. You can drop a little pole right here if you want to call that a flag pole, whatever. It looks flaggy sort of to me. It looks bullish. The key is that it's holding the average. It held that average smartly and started to break out towards the upside. So again, that's euro. I hope this will help. Give you another tip or trick that you could use moving forward in the next week or two. I've got a few more out there for you I'd like to share. More windows, please. So who can we work with next? How about the dollar index? Okay, another tip on here I noticed. By the way, I don't build these webinars until the night before. I literally built this webinar until about 1:30 a.m. last night. I put these charts together. I like to use the most fresh data that we can come up with. This way I know what I'm going to do next week, and hopefully you know what you're going to do next week. So US dollar interest, which average or algorithm are they into now? Algo, average, doesn't make a difference. It's what they add into their algorithms. It's so easy to spot. Anyway, the dollar index was using a 70-bar moving average, and it worked like magic. It's this green average, works like magic, stays inside the channel, behaves like it should. Everything's fantastic. Well, right about here, we dropped below the 70-bar moving average. We got out of the channel. New channel starts forming. New average comes into play. Wall Street's latest algorithm, 109. Check this out. Simple, easy to use, effective. It's the 109 SMA on your dollar. Let me blow it up for you a little bit. And that is your timing mechanism right now. This one, we are no longer going to use unless it comes back in play. We'll just turn it white for now so it's there, but missing. You will be keying off of the 109 if you are a dollar trader. I've already showed you the opposite side of that in euro. Use either of the two. So it dropped below the 70-bar moving average. Channels are pointing lower. Tip on this chart, use the 109 simple moving average to time your dollars. And of course, we are in this downward projection, and it probably should continue. Now, interestingly enough, you had a bull flag in euro right at an average. You've got a bear flag in dollar right at an average, as it should be. So some of the things I'm showing you, of course, seem simple, and I am keeping it that way on purpose. I get much more intricate when I'm getting in and out of the markets, when I'm using my OMNI method to figure out where I'm going to buy and sell. The thing is, I would never dare show my OMNI method in this free webinar. So I'm not going to do that, kids. That's real. That works. I can kill the markets with OMNI, as I've done for years, but I don't just give that out to the public because, God forbid, it ever gets in public hands. I'd rather just teach it to a few people that I bring into Las Vegas. Every now and then, I teach them my OMNI techniques here in my home office. I am going to experiment the beginning of next month and actually do an OMNI camp on the road, Rockland County. Can't wait to see you guys. I'll let you know how that goes. If I like going on the road, maybe I'll go on the road more. But I'm going to do my first OMNI camp on the road. I'm so excited at the end of the month. Anyway, so you got a bear flag here. Right? The pole, of course, gets bigger. Let me just expand that pole for you. So you've got a bear flag. It's working. It's below the 109. It's dropping. Dollar moving down is a good sign that euro is probably moving up. They work opposite one another. I hope that will help you if you are a euro trader. What else can I help you guys out with? Oh my goodness, where are we? We're going to leave that NASDAQ alone. Oh yes, welcome to the AI revolution. I get to say it again. This is so exciting. All right, so Nvidia, big piece of the AI revolution, right? Nvidia working on a 90-bar moving average. Let's go back. Look at how well Nvidia and the 90-bar moving average is working. Traders, anybody remember this in my last webinar, the knock-knock technique? You guys must remember this. It's probably not your average trader that comes out with some silly thing that says knock-knock, right? You must remember this. You cannot knock on a stock door this many times without it opening, right? So I was showing you the knock-knock technique. Knock, 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 boom, it opens. All right. The 90-bar moving average is what's important here. See how well that 90-bar moving average is keeping Nvidia in check? Well, just watch it. Keeps it in check. Keeps it in check. Wonderful, right? What a great average. Keeps it in check. Now it gets above that average and it gets away from it. Goodbye. It has gotten away from the average. Nvidia wants to move higher. Nvidia is a buyer of dips. Nvidia requires, if you want to time Nvidia, that you use the 21 bar moving average. It is perfect right now. It is ridiculously perfect on Nvidia. Let me move some of this out of the way so you can see what I'm getting at. So the tip on this chart, if I can move this, I will, is to use the 21-day simple moving average to time Nvidia. Look at how well it works. 1, 2, 3, 4, 5, 6, 7. Then it gets underneath and stays underneath. Look at how well. I mean, wow. When I found out, I went, oh, dear, thank you, Wall Street. I thought I'd share that with you cats as well. It's also forming a new channel. Look, check this out. So I kid you not, I don't think any of this. I'm not making any of this up. I am pointing out factual analysis to you that will happen. This is not a guessing game for me. I'm 43 years deep. I promise you, these things work out almost all the time. You just have to know how to spot them. You're in a strong bull channel. You got away from the 90 bar moving average, got into a smaller one, exploded, had a massive gap right here. This is an earnings report gap, by the way. What mostly this is, if you ask me. In fact, let's just draw a little gap here. In between these two blue lines, massive gap. Earnings happened, and this is your AI revolution. I mean, Nvidia is making a fortune off AI. We are in a huge AI revolution bull market. Nvidia looks like a fantastic buy off of the 21 bar moving average, or simply buy it at the bottom of this channel. It is working. It will work for you. Great trade, great stock, and great indications off of it. So welcome to the AI revolution. I promise you, we're in it, and we are going for quite some time. So for you bears out there, have I convinced any of you yet that you're wrong? I mean, have any of you started thinking that maybe you're wrong about this? The charts don't lie. You know what does lie? Crazy opinions that get stuck in your head. Those lie. Charts don't lie. All right, what else do we have? We just did the dollar. Let's go look at the Dow Jones Industrial Average. Here you go. There's another pretty chart. So the Dow's all-time high is right here. So that's where the all-time high is, right? And we've had a big, big, big crash, and everyone says that this is just a wave before the next shoe drops. And maybe they're right. I don't know if they're right or not. I promise I'll be the first one to call the downside. But looking at this right now, let's just see if I can show you what's going on. We were using a different average, but look at this one. The beauty of this chart is the averages I've found that work so well. Look at this 60 bar moving average right here. It works like magic. I mean, wow. So I figured, all right, we'll start using the 60 bar moving average for timing. But bigger than that is the fact that we are close to all-time highs as opposed to all-time lows. And this wedge or pennant, if you will, is forcing the market higher. It's pointing upwards. It's trajecting the market higher. So the likelihood is that we will break out of this towards the upside. And what I want you to recognize is if you are going to trade it, go with the 60 bar moving average right now. It seems to be magical. Whatever reason, I could care less. I don't try to reinvent the wheel. I try to spot the best wheel that works for my car, so to speak. Slam it on the car, go very fast with it. I don't try to reinvent the wheels. I just want to make sure I use them properly. So the wheel has been invented. Whatever the 60 bar average is, it is. Wall Street loves it on this particular model called the Dow Jones Industrial Average. So do I. And I noticed that when it does get through, here's what's key for this week coming. Pay attention. When it does get through, it doesn't last long. It just hits the bottom of the pennant and bounces back up. So what I mean is look inside this rectangle. Okay, you see it did get through, hit the bottom of the pennant, went back up. Well, we are in the same situation right now. Maybe it gets through and hits the bottom of the pennant. So what? That's what it does. Keep your eyes on that. If it hits the bottom of the pennant, comes back above the 60, long you get to go. Keep that in mind for next week. The tip is that Wall Street is king off the 60 bar moving average in your Dow Jones Industrial Average. What else is out there? Oh, we're going to start to look at weeklies, huh? All right, I think it's time to go start to look at weeklies. There should be, well, this one says massive head and shoulders. Does anybody see a head and shoulders? Ah, there we go, same chart. I was wondering why it was there. Here's what another reason why I want you to recognize we are now showing signs of bull market, not bear market. I don't care what your fund managers tell you. The Dow Jones Industrial Average started off with a head and shoulders, left shoulder, head, right shoulder, 2022, January 5th. That's the high right there. And then it cracks. So it cracks down. Let me move some of this out of the way so we can read it. Get back over here. It cracks down. So the Dow Jones agrees. It's a massive head and shoulders. 2022, we go down, gets under the 200 ball moving average. Red line resistance. Here, gets above the resistance, gets above the average. Whoa, interesting. Comes down, tests the 200 ball moving average, holds it, gets back above, and here's what's interesting. If the down move started with an upright head and shoulders, we've got an inverted head and shoulders starting the up move. Doesn't that make sense? Doesn't that show you that, yes, this is probably the other side coming now, aside from everything else I've shown you? All right, so an inverted head and shoulders above the 200 ball moving average. That's this. It's built above the red resistance. That's this. The tip is buying will pick up as soon as we get above this inverted head and shoulders, and that's represented by this little line right here. I'll make it darker for you. Buying will pick up as soon as we get above that. That's where all the stops are going to be above the market to take it higher. Right now, all the stops are being put in above that blue line. We are going to take those out at some point and move higher. It's what the market's indicating right now. Nothing goes straight up, so you could come all the way back to the 200 first. But that is the eventual this year. That's what will happen is the upside. Let's see what else we've got prepared. Now, remember, every one of these charts are the same things we looked at last webinar where I called bottom. I'm just moving it forward for you now. So we just looked at the Dow Jones weekly, right? DJI. Let's look at the DJT weekly. This one's another pretty chart and simple, simple, simple. When I say simple, look at how simple this chart is. Let me just move some of this out of the way. All right, so stair-stepping higher. Now, there's a word that I'm going to use that you've heard from everyone else, and they're wrong. They don't know how to see. Many people don't know how to see market rotation, sector rotation. So what they are saying is that this rally has happened without wide breadth. Stair-stepping higher is a sign of a healthy, wide breadth market rally. What does stair-stepping mean? See these dotted lines, which I could start to make deeper if you need me to. I think you could see them, but this is just stair-stepping higher, right? It steps up here, and then it steps down, it steps up, it steps back down, it steps back up in a nice broad fashion. It's stepping up and stepping down. It's bringing the other stocks with it. This is a healthy market. Up, down, up to a higher high, down to a higher low. The first chart I showed you was this exact thing. So let me show you why it's absolute. You go up to a high, down to a low. You go up to a higher high. You go down to a low, up to a higher high. And I'm not really going to count that little zigzag. You're going to watch this one instead. Watch this. This is going to take us to a much higher high. So high, low, high, we're waiting. We expect it up here. Probably will end up taking out the double top. That's what you'd expect in this long, steady stair step higher. As the market moves inside of this channel, eventually you'll end up there. And that's part of the steps that is showing you that this is a wide breadth move. It's not just a difference. If it was going straight up, that shows you that it's very narrow breadth. It's a few stocks. When it's going up like this, it's taking everything with it. And then we've got a really pretty chart. Well, we'll do one more. This was here. We have the weekly. Let's go with this one. We did that already, right? We showed the head and shoulders. Let me show you. There's one really pretty chart that we'll look at. So now we're all big S&P traders, right? The S&P has broken above this red resistance line on a weekly chart. Now we're looking at a weekly. Each one of these red bars or green bars represents 5 full days of trading. So the S&P is in a tailspin and everyone's bearish except for that. Why would you be bearish when you are in trajectory channels moving higher and it's different than it used to be? What do I mean by that? Well, here you basically rallied up, hit the red trend line, resistance, dropped. Hit it again, same reaction, dropped. Hit it again, same reaction, dropped. What happened here? Well, that's different, right? And what we do, we've gone into a series of upward channels now. All right, now you have this channel, the blue one. Make it a little darker for you. So you got the blue channel moving higher. You've got the green channel moving higher. And the market is moving higher. And the beauty of all of it is, check this out, it all happened when it bounced off of the 200 bar moving average sitting right here. Let me just make this circle a little bigger if I can grab it. Right there is where it all started to change. Got above the 200, trajectory is moving higher. Wall Street is watching, buy dips down to the bottom of this green channel is my tip for you in the S&P. And then there's another chart that I think you're really going to appreciate. Many of you have seen this before, and it is absolutely worth taking a look at. And it is my NASDAQ chart. Let's just pull that bad boy. Oh, there's one more. I got a prettier chart than this for you. There's just so many charts I've gone over. I got to make sure I can pull the right one. That's a daily. Yeah, and we'll do it like this. All right. So this chart is my absolute favorite chart, and it is the chart that will convince you whether or not any of the other charts I showed you convince you that we're in a bull market versus a bear. This one will. Follow me. NASDAQ weekly chart. The tip is that the NASDAQ chart is our indicator. It is telling us everything, and I'll explain that to you. You're going to use this chart for your sense of direction. If you like what you've seen in this, please join me at livewithoscar.com when we're done. Now, check this out. You're looking at the 200 bar moving average, this green average right here. It goes across the entire chart. So we're going to go back and look at this 200 bar moving average. Just follow me on this. The 200 bar moving average never gets pierced. It just never gets pierced. Look, let's pull this out of the way. Maybe I should pull it down here. It never gets pierced at all. It's the 200 bar moving average on the weekly NASDAQ. It's above 2008-9. The only time you could pierce this was the crash of 2008. And by 2009, we were back above. Now follow me on this. NASDAQ weekly. What happens after the NASDAQ gets above the 200 bar moving average or comes down to it and hits it? A massive rally ensues. Massive. Look at the size of that rally. So you got to the average and a massive rally ensues. And what does it do? It just continues on. And it continues on. But look, somehow gets close to the average and a massive rally ensues. This is 2016. Let's move along now. Look at here. 2000, which one was this? 2018. We dropped down, almost hit the average, and a massive rally ensues. And here's where it gets interesting. The market during COVID could not take out the 200 bar moving average. During the COVID crash, it stopped cold at the 200. But what did it do once it got there? Like it did here. Massive rally ensued. Gets here. Massive rally ensues. Now you have to realize this is a weekly. This might look small. We're talking about the price of 5,800 NASDAQ, the beginning of this little rally. And after hitting the 200, it goes all the way to 97. From 58 to 9,700, the NASDAQ went after getting close to the 200. Then it actually hits the 200. And you know where it goes from? 6,600 to 17,000. All right. So we got something here, don't we? Then it starts to run into resistance. Boom, boom, boom. Every time it hits that, it fails. But here, things change. And here, things get happier. Now, you get above the 200 bar moving average. What do you think is going to happen, kids? An extended rally is what will happen. That's it. There is no question. That's what happens if you get to the 200. an extended rally. So if you are still bearish out there and you are a 401k manager, shame on you for using your opinion over your eyes. You've got customers that need their money in the market right now, and you've got them in bonds at 5.5% interest instead of in the stock market where you belong, because most fund managers believe in what they think, not what they see. You give a fund manager a couple of bonuses because he's using other people's money and he gets a 2% or 1% management fee. Next thing you know, his pockets are full and his brain thinks he was born for this. So he starts to say, I know fundamentals, this thing's going down, I know better, I've made money doing this, on other people's money, of course. And they get stuck in this mode, and then you show them a chart and go, you are wrong, but they don't know how to get out of that mode. Why? They think they were born for this. I know better. I am a messenger of charts. I read a chart, I send the message out to other people, and I trade what I read. I do not think I'm smarter than the market. And these charts are a simple roadmap to everything that's going to happen next. And that is about all I had to show you, kids. I just wanted to make sure that you are in tune. Nothing goes straight up. We are in a bull market. These projections are working. Don't listen to the crazies out there. Use your eyes. Jeff, all yours.
You got time for a second or a couple questions, I mean?
Sure, I'm here.
So is it www.livewithoscar or live with Oscar?
Listen, it is live with Oscar because I'm here 24 hours a day. If I'm eating, you're eating with me. If I'm swimming, you're swimming with me. It is live with Oscar, baby. It's what I do. You want to join me? Come on down.
We had a couple questions that are around the same thing. Anise and Amit wanted to know how you figure out what moving average you're using on a certain chart.
Well, it's basically trial and error. You start using different averages until you find one that's smooth and stays out of the market's way, but hits key spots only, like this 200. And when you see that, you must realize that it's being programmed into every algorithm. That's all they have. Algorithms, unless you want to make things up, by the way, unless you want to make up variables that you think are part of the market, an algorithm has to be based on what it sees in the past. It has to be. Or you're adding stuff in that didn't happen. So if it's based on what happened in the past and the market stops at that average every time, the algorithm has it programmed in. We just have to find what average stops at those turning points, and I promise you it'll be in the Wall Street algorithm. Trial and error is your best bet. Just keep snapping them on until you get one that fits.
All right, one more question from Julian. Julian wanted to know, when you're looking at the EU, is it implied that the EU is going to move higher?
It is. Let me see if I can pull that chart for you again.
Not a guarantee, just for
I'd
legal
like to
reasons.
Do that, but that make me discouraged. Let's see. Is my Euro chart? Do you see the Euro chart? I'm sure it's right before my eyes.
Oh, I'm blind in both eyes. I can't see out of this one, and I can't see out of the other.
How about we just do it a better way? It's the 6E, right? Oh, it's right in here, baby. I got you. Euro. So I've got so many charts. All right. So this is indicating that the market absolutely does want to go higher. It is in an upward trajectory channel. It's bouncing off the 100 bar moving average, and it's just breaking out of a bull flag. So yes, short term certainly wants to go higher, and long term it looks the same to me.
All right, very cool. Oscar, a couple comments for you. These are straight from the YouTubes.
Okay.
Great overview of the markets, truly invaluable information. Sandy wants to know that Oscar writes the charts, and she put one exclamation point there. And then let's see. Do you have any? So just great job is what I was saying. A lot of people, a lot of really good comments. We love you. You do such a great job when you come in here.
Thank you. Thank you.
So
I hope it was clear, simple. I was just trying to offer some tips that people can use next week, next month, going forward.
Here's a quick one. I know I said it was the last one, but like this is, I promise, the last one. Jim wants to know if you think Russell actually catch up, because it's been kind of lagging the other major indices over the last several years.
Sure.
I think that's a great question. That's why I asked it.
Fantastic question, actually. So the Russell 2000 is made up of smaller cap stocks. And what we call sector rotation is when you see Wall Street buying let's say the larger brick and mortar stocks, and the Dow starts to go up, and then they'll switch to the NASDAQ stocks, which are high tech, and NASDAQ will take the lead, and then Russ will take the lead. Well, 3 weeks ago, Russell 2000 was in the driver's seat. It was taking everything higher. There's been sector rotation now. Looks like it's moved into S&P a little bit and NASDAQ. But yes, Russell will catch up. It's just right now, especially with the window dressing, which you see at the end of a quarter, it's always smarter to get the large, expensive stocks up higher than the smaller stocks. I think in this next quarter, you'll start to see the Russell catch up.
I love that question. I think that wins the question of the day.
Great question. But yes, Russell tends to lead sometimes. It's not the leader at the moment.
All right. Again, live with Oscar or live with Oscar. It's spelled the same either way. You can say it how you want, but you should go join, hang out with Oscar. He does such a great job. I love having Oscar on. Thank you for coming in with us today, Oscar.
Hey, it's simple. If you do join, work your way to the chat room, and I will literally be here on camera to hang out with you. Probably not today. I could use a day off, but you'll see me here from Sunday night until next Friday night.
All right. Very good. Thank you again, Oscar.
Thank you very much. Thanks for having me. Good luck, everybody.
All right. We're good. Let me go ahead and do this. We